Hello everyone, this is Twisted here from 𝗨𝗣𝗏𝗧𝗏, and I would like to go over some important news for the upcoming week, and also some TA for the S&P 500. So initially, to start with, reading through Bloomberg, the main headlines on the market says that Biden and McCarthy voice confidence debt deal will pass in time. President says that he expects McCarthy has enough votes in the House and deal caps spending, cuts IRS budgets, and expedites pipeline. Further into the article, it says President Joe Biden and House Speaker Kevin McCarthy expressed confidence that the debt ceiling deal will pass Congress, averting a historic U.S. default, while setting a course for federal spending until after the 2024 election. The agreement prevents the worst possible crisis, says Biden. Moving forward into the article, it says the bill will suspend the debt ceiling until January 1st, 2025, likely putting off another fight over federal borrowing authority until the middle of that year. As of that news and the discussion that's come up in the news, US stock indices futures advanced in Asia through Monday with contracts for S&P 500 and Nasdaq gaining 0.4 and 0.7 respectively. Gold inched lower while BTC rallied. US is closed on Monday for Memorial Day, as are for the UK and some parts of Europe. So we are expecting US markets to open back up in 31 hours. At the moment, the only markets that are open will be the Shanghai Stock Exchange, basically China, a little bit in India, and this is Bahrain. So majority of the big volume movers are closed at the moment, so we may expect heavy volatility either on the upside or to the downside on Tuesday as soon as the markets open up. Going on over to a next article that I found about this basically goes over the same thing, and it says the deal reached on Saturday followed days of tense negotiation between the White House and the Capitol Hill, blah, blah, blah. At the end of the day, they're saying that the payoff obligations will go up until June 5th, which will give them enough time to make changes, do whatever needs to be done, and the deal will go through. That's what the possible outcome will be. Just digging into further detail of this topic, I came across an article from Times. It says, "What to know about the history of debt capital." It's an awesome little article written by them. I will leave all the links down in the description, so please feel free to check them out. But just some important pointers in this article is that what is actually debt ceiling and why was it created? So a lot of people do not know what debt ceiling is and what are the uses of it. So this article helps you understand a little bit better. I personally didn't either. So reading through this, I've come across some really good information, so it's handy. I've highlighted some important points here. I'll just read through them and then we'll jump into the TA side of things. So the debt limit refers to the ceiling imposed by Congress in 1917 that sets the maximum amount of outstanding debt the US can incur. So in the last 2 decades, US has added 25 trillion in debt and spending nearly 1 trillion more than it receives in taxes and other revenue every year since 2001, in large part due to financing wars, tax cuts, emergency responses, and federal spending. And to make up the difference, the government has to borrow money to continue to finance the payments that Congress has already authorized. So how many times has the debt ceiling or the debt limit been raised? So since 1960, Congress has revised or extended or raised the debt limit by 78 separate occasions, with 49 times under Republican presidents and 29 under Democratic presidents. So that's some facts on here, just to know. And when was the last time US was debt-free? So January 1835 was the first and the only time all the government's interest-bearing debt was paid off, according to the Treasury Department. So that's some really interesting points in here in the article, so please feel free to read through them. Now jumping into the TA for S&P. I'd like to start with the weekly chart. So based on the way I do my analysis, I use SNC and ICT. So we always go through ranges and see what the price is expecting to move towards, basically draw on liquidity for the upcoming week and days and so on and so forth. So two important points I see here is of course the all-time high here, which is again too far away, which we won't need to worry about at the moment. Then the lowest low that was here in the chart that we see at the moment based on the weekly swing. So that's a low that we have, and then this was back in October last year, and we have been just traveling up. We are coming towards a very important pivot point or swing point where we may see definite reaction. We are clearing the highs up here, traveling into the swing point high, which was actually strong enough to take the lows. So these lows were taken out by this high and we made a new low. So overall on the weekly, we have bearish price action, order flow. We are in a pullback phase on the upside until we reach here. We may see a reaction towards the upside, go up, and then we come down, mitigate all of these levels, but that's for later. So looking more into the TA, these are some relative equal highs that were run around here, and this is buy side liquidity. We poked our head in, we pushed down, lows were respected, we pushed back up, breakthrough. Now we are forming structure and we have bullish candles, and the lows are holding. So that's an important part for our analysis. Also, we have to keep in mind that when we grade the price into a range, we do see that price is in extreme premium at the moment. So the red is the premium, green is the discount. So we are around the red premium zone in the extreme of that swing. So we may see some reaction depending on what the market does. So we will not rush into or FOMO into it, but we just have to mark out important swing points so we are aware of them. Now I do see an important level around here, which is the volume imbalance between the two price points or the two candlestick patterns here. I have discussed this with our Discord group members when I was doing educational streams. So they know what it is. If you want to know more about this, please feel free to join. The links are in the description. So this was tapped in, we have filled it, and we do have a little rejection. We have a bearish candle, but we have not closed below it yet. This is just the beginning of the week, so of course. But this is one bullish news here that the lows are holding, so we may mark out some important liquidity swing lows. So this is number one, and this will be number two. So these are two weekly lows that we will have in mind for the upcoming week, upcoming days and throughout the week, so on. Dropping down. So these are just more important points that I just like to mark out before I even look into small time frames. So just I have a narrative that what we are doing on the weekly time frame is that we are just pushing down, making lower lows, going back up. The highs are being respected, we push down, lows are being taken, and now we are in the pullback phase where we are reaching important points where we can see some reaction to the downside and then snap up or whatever the case may be. But this is something that we have in mind. Dropping down into the daily time frame, you can zoom in a little bit. So this is the bigger macro swing, so we can further refine the areas here. So this is an important level that we have broken above, and now we have closure. No, we do not have closure. Okay, so where do we go from here? Same thing repeats up a bit here. The lows are being respected. The lows are being respected for now. We do see some bearish price action as soon as we hit that level, but then we have rallied up from here, broken above that. And these relative equal highs were cleanly taken off. This was the drawn liquidity for the past. As soon as we were reaching here, this was the drawn liquidity. We were expecting the price to reach into the volume imbalance, and which we did. We did see a reverse from here, but we have respected the lows. We have poked a little bit further down, made equal lows. When you stretch this line around here, we have made equal lows, so we can see volume from here. If we drop down here we can see some reaction to the upside, and then we may see further rejection or we may see further upside. But that's just predicting. We work with what we have in front of us. So that's probably the easiest way to go about when you're doing your technical analysis, because fundamentals are something that will support your technical. So you always need to have coherence in the way you make yourself you expose yourself to the market or make yourself available to the market, depending on how you want to frame it. So just structural analysis, very simple. We have taken the highs, now we are pushed down and we're broken back up. 4-hour will give us a little bit more clarity of what the price is doing, and there we go. So this was the low that we marked out on the daily, and this was the other low that was marked out on the daily. There we go. Oh, this the second one that was on the weekly as well. So there you go. 4-hour time frame, we have broken above the highs and we do have a massive bearish candle, but we have tapped into the volume imbalance again here on the 4-hour. This was basically the gap up on the opening around here, so we may just change that up to a different color, make it a little bit more obvious. There we go. So that was the gap we poked in, and now we are traveling back up. We may see run on this, or we may just start seeing rejection, because also when you start grading the price range, we did drop in, break above it. So what do we get after every break of structure? We do see a pullback. So that's the break of structure on the 4-hourly. So we just mark that out here, 4-hourly break of structure, and then we may grade this price range as well in here to go. So that's a premium, that's a discount premium was taken. If we start snapping back into the price range, we may see some fractal support here around the FVGs, so or fair value gaps for the 4-hourly time frame. 1 and 2, these are the two prominent ones, and this is the one that accommodates the gap as well. So you can draw one from here to there, but just for clean charts, this is two important points. We do see a fractal break around here. So that was our first initial move, which was like confirm that, yeah, we are pushing further up into these inefficiencies on the premium side, so which was beautifully taken out. We have poked through, and now we are forming support. So just be aware of price pulling back for the upcoming week or days. So just make sure that you are targeting either the high with some structure, or if you're targeting low, you would like to see some considerable breakdown of the lows. You would like to see some strong structure to the on the low side, and the high should be respecting before you start taking shorts from there. Okay, so dropping down into the hourly time frame, this is what we see here. What do we have? We do have a push up. This was our fractal break, which is a break of structure on the 4-hourly time frame. Go push up, and then we have push down. So it's a bit too early for us to know where price will be heading, if the price will be heading down or will be heading up. But just to mark out so this is the swing that we are in at the moment. So this is the low, this is the high. I'll just zoom right into that swing so it's cleaner. There we go. So this was the 4-hour gap up that we marked. So we just mark that the gap up, and we mark that on 4-hour. There we go. So this was the gap up, and price is pushing further in. This was the sell to buy. This was the sell to buy range, and this was the buy to sell range. So we just mark this out here. So this is the 50% of the swing fair value. If we break above it, we can see some bullish price action, and this area can be a run on liquidity for the upcoming hours. If not, then we may see some rejection from here. So these are some areas that I am interested in. 4-hourly fair value gap, this is the, so we'll just refine that a little bit more. 4-hour, this is also 4-hourly. There we go. And we can refine this further into our 1-hourly time frame. So that's the fair value gap for the 1 hour. Okay. So couple areas. This is hard at the moment to to just determine where price will be reacting from and falling down or going up. So as of now, I am staying neutral before I see any, and I'll enter the market when I see some more bullish price action for the upside, or I would like to see some aggressive closes below the lows, and then I will see look into some entry models for shorting into the fair value gaps for the hourly or the 4-hourly. So hope this was helpful for a quick little update on ES, and hope you guys have a good day, and I'll speak to you next time. Thank you.